This financial review committee meeting on Tuesday, October 25th. Madam Secretary, can you provide the roll call?
When your name is called, please answer with here or present. Member Federico? Member Killebrew?
Here.
Member Mitchell?
Here.
Vice Chair Frost?
Here.
Chair Mesqua? For the record, all members of the Financial Review Committee are present with the exception of Member Federico and Chair Mesqua.
Alrighty, now we'll move on to public comments. There will be 3-minute time limit per person and an overall time limit of 15 minutes for this public comments portion of the agenda. All comments are to be directed to the Financial Review Committee members and shall not consist of any personal attacks. Members of the public are expected to maintain a professional, courteous decorum during their comments. State law prohibits the Financial Review Committee from taking action on any specific item unless it appears on the agenda. Madam Secretary, do we have any public comments?
We have no public comments at this time.
Alrighty. Let's move forward to new business. And our first item, approval of minutes from the September 13th, 2022 Financial Review Committee meeting.
I make a motion to approve the minutes as stated.
I'll second.
Alrighty. Madam Secretary, can you call for a vote?
Member Federico? Member Killebrew?
Yes.
Member Mitchell?
Yes.
Vice Chair Frost?
Yes.
Chair Mesqua. This motion passes by a vote of 3-0-2 with Member Federico and Chair Mesqua absent.
Alrighty, on to our second item, is the Financial Review Committee City Investment Policy. And do we have a staff report?
Yes, so this is our annual review of our investment policy. We're bringing it forward a little bit early. We typically bring it to the FRC in January and then goes to council for approval in February. But because by the time it gets to council approved in February, the calendar year has already started. So we're kind of readjusting the schedule. So we have an updated investment policy January 1. It was reviewed, our policy was reviewed by our contracted auditors, Davis Farr. They found no exceptions. There were a couple recommendations. One was the renaming of our, what we used to call the CAFR, the Comprehensive Annual Financial Report, is now officially the Annual Comprehensive Financial Report, or ACFR. There was actually a GASB statement to make that official. They also noted, why? Because CAFR, when it's pronounced, is a not nice thing to say in some African languages. So they've changed the first 2 letters to make it more appropriate.
Okay.
Yeah. The other thing that it wasn't an exception, but they noticed that we had a couple of investments that are allowed in the government code, but wasn't in our policy. And unless the city council or the financial rules going to, recommend some mass change to how we do our investments besides just treasury notes and LAIF, we just didn't make those edits to add those investments in there. Other than that, we added one position, the finance manager, as someone who could approve investment transaction. Since the position is a fairly new position, it wasn't in the policy before, so we went ahead and added that. Other than that, there were no other changes. We plan to bring this to City Council at their meeting next week, November 1st, and we would just like the FRC to approve recommendation to the City Council. And that ends staff report.
Do we have any, let's see here. Do we have any committee member questions, discussion? Just a dumb question.
No, sir.
Dumb question. Do we have any funds which cannot go into one or the other? Our cash positions in the funds, or can any cash in any fund can go into LAIF or
Yes.
treasury? Oh, okay. I didn't.
Yeah, all funds we have are subject to the investment policy. they're all pooled for investment purposes, but they're tracked separately in the accounting system.
Yeah, the only thing that's doesn't is our section 115 trust, because it's an irrevocable trust. It doesn't fall under the same guidelines as the government code.
Got it. And that has its own investment. That's
Yes.
right. Okay. Yeah. Let's see. Do we have?
I'll move the item.
Yeah, Madam Secretary. Actually, I'll recommend. I'll move the recommended action that we make the small changes to the city's investment policy and forward on to the city council.
I'll second.
Madam Secretary, will you call for a vote?
Member Federico, Member Killebrew,
Yes.
Member Mitchell,
Yes.
Vice Chair Frost,
Yes.
Chair Mescla. This motion passes by a vote of 302 with Member Federico and Chair Mescla absent.
Okay, on to our third item of business, the quarterly financial report ending September 30th, 2022. Do we have a staff report?
Yes, we do.
All right.
So this is the first 3 months of our new fiscal year 23. On the revenue side, there isn't a whole lot to report because most of our major tax revenues don't come in until later in the year. But TOT did have a very good summer. We came in at $5.4 million, which is $600,000 more than the same period last fiscal year. A lot of that has to do with inflation and still some pent-up travel demand, but we believe that rate increases and just costs, businesses had to increase costs, which is being funneled down to the consumer. So that's good news. The rest of the revenues seem to be tracking similar to the previous fiscal year, or historically speaking. We don't have much property tax to report. Sales tax, we have one in advance, just because of the timing of when we receive those revenues. Expenditures, we're about at $9.4 million, which is about actually $600,000, the same as revenues, up from last fiscal year. Notable increases would be police services of $97,000, landscape, tree and park maintenance is up $271,000, but a lot of that has to do with timing of payment of invoices. Professional services is up $900,000, and community activities is up $76,000. And community activities is up basically because COVID's kind of done, and we're doing a lot more of our events and our services to the community. And that ends staff report, and I can answer any questions.
When you talk through that our spending is up relative to last year, but we're also $600,000.
Up on TOT.
Oh, okay.
Yeah,
That was just TOT.
that was just TOT.
Okay. But expenditures overall are tracking relative to our budget.
Yes.
Okay. No. Sounds good.
Yeah, I don't have any questions either.
No proposed budget adjustments. Alrighty.
Is there any concern with inflation for the next quarter?
Well, we think inflation is probably going to help sales tax initially, but we do probably see some slowing at some point in calendar year 23, just overall. Yeah.
And on the expenditure side, when we did our rollover report, we also bumped some of our expenditure line items up. So
Yeah, in anticipation of increased costs.
I think we did that back in June as well.
Yeah.
Set up the budgets. It's more expensive.
Alrighty.
That's it?
Do we have a motion?
I'll move the item.
A second.
Alrighty. Madam Secretary, you call the vote.
Member Federico, Member Killebrew,
Yes.
Member Mitchell,
Yes.
Vice Chair Frost,
Yes.
Chair Mescla. This motion passes by a vote of 302 with Member Federico and Chair Mescla absent.
Okay, our next item, CalPERS liability review. Do we have a staff report?
We do.
I bet we do.
We do. Per City Financial Policy 235 pension funding, each year in October, staff is to bring back or bring an update on the city's pension liability. Our last FRC meeting, we brought the new actuarial reports, which actually really were good because it reflected the 21.3% rate of return CalPERS experienced in fiscal year 21. So that actually brought up our funded ratio to 88.2% with a $4.3 million unfunded liability. Unfortunately, CalPERS didn't do so well in fiscal year 22 and had a negative 6.1% return. Staff was able to use the CalPERS pension outlook tool to figure out what that was going to do to our unfunded pension liability. Our combined liability is going to go from 4.3 million to 8.3 million. So we're going to be around 78.2% funded. That also assumes that all other actuarial factors were met in fiscal year 22. We know that inflation was really high. I think CalPERS assumes inflation of 2.3%. They changed that in the last asset liability management review. So we're probably going to, not just the 6.1% loss in revenue or rate of return, but also inflation is going to factor into that big loss. So
It's not straight up percent to percent.
yeah, it's not just return on investment. So there's other factors that they didn't meet in fiscal year 22 that's affecting our funded ratio. So last month, the City Council approved an additional $2 million set aside to possibly address the loss in fiscal year 22. And so we brought some options that are available per our policy, including, so we already have our Section 115 trust, which we've already put $4 million in. And we know that it needs to mature. Because especially with the market the way it is right now, I think we're at a little bit of a loss right now on our Section 115 trust. I think we're down about 5% based on the last statement. So, but I think when we formulated the policy and when we put the money into the trust, we knew it's probably gonna need to sit for at least 5 years to get some investment earnings and to get past this kind of volatile period. So we looked at possibly making an additional discretionary payment, so an additional payment to CalPERS to see if we can maybe get some interest savings. Because as you know, we have our, every year we get a new layer to our amortization basis. It's either a gain or a loss, depending on how CalPERS does. So if you pay off an amortization base, you get interest savings because you're basically paying their discount rate, the 6.8%, on any former loss basis. So we did use the CalPERS pension actuarial or pension outlook tool, and if we were to apply the $2 million as an additional discretionary payment or an ADP, we would save approximately $2.3 million in interest savings. Now, if you look on page 4 of the staff report, there's a new amortization schedule, and there's different columns. So there's our baseline, if we were to make a $2 million ADP, a $1.5 million ADP, or a $1 million ADP. So there's different options, so you can see the different interest savings that we can have. Now, this also assumes that CalPERS is going to make their 6.8% going forward, and all other assumptions are met. And then we would have our unfunded liability paid off if we were to do the $2 million in fiscal year 44. So, but I think we know, if you look on the next page, page 5, you look at CalPERS historic investment returns, it's pretty all over the place. So we're going to have good years and we're going to have bad years. So we're going to have years where we're going to have gains and years where we have losses. So although if you make the additional discretionary payment, those interest savings are locked in because you've paid off an old base. But that doesn't prevent a new base formulating in the future, which we'll also have to pay interest on. And in fact, the 6.1% loss is probably going to add an additional base somewhere around $3.5 to $4 million of a loss. So that we're gonna end up paying 6.8% on for the next 20 years. So those are things to consider. But I think if you look at the difference between making a $2 million ADP versus a $2 million additional investment into our trust, if you're assuming a 3% rate of return on our trust, we're only gonna make over the next 20, I think this is about almost a little over 20 years, is about 1.6 million versus the 2.3 million in interest we would be saving. So investment wise, it makes sense. But when you're making an ADP, you have to also kind of time it appropriately, because if you make the ADP in a year that CalPERS is looking like it's gonna have another loss, you're not maximizing that investment. So what staff recommendation is right now, because of the volatility in the markets and rising interest rates and a lot of talk about a recession next year, we're recommending to hold off until FRC meets again in January, and let's revisit this and see where the markets are going and see how close we think or how far off CalPERS is to making their rate of return this fiscal year, and see if an ADP still makes sense at that time. Because if we put that 2 million into our trust, we know it needs to sit for a while. We're not going to be able to pull out. And if the markets make a turnaround and we want to make an ADP and we've already put the money in the trust, we don't want to pull money out of the trust and take it at a loss in that side. So that concludes my staff report. Be happy to answer any questions.
I know we're not really sitting yet at 8 million unfunded, but if we have 4 million in the trust and then we're gonna basically hold off 2 million in limbo, about either pay it off or put it into the trust, do we need to identify the additional balance to get us to our fiscal policy of, what are we supposed to be at, 90%?
90% by fiscal year 28. So if you go to page 3, there's a small table. So if we don't do anything, and with our 4 million in the trust, we should be at 90%. Again,
It's 90% of,
90% combined between what we have in our with CalPERS and our trust combined in fiscal year 25 will be at 90%. So we're okay right now, but if CalPERS has another loss, then it's going to be farther down the road before we reach that 90% with the combination of what we have at CalPERS and with what we have in our trust.
that's regardless, that's not even taking into account the 2 million right now.
Right, correct.
So we're okay right now. What's LAIF earning right now?
About in September, they average about 1.5%.
So we're getting 1.5. We could put it in the section 115 and it could possibly lose money. Probably not a lot, but it's kind of, the recommendation is to kind of sit tight and just keep monitoring it. And then yes, there is some market timing here, which I don't like doing, but when things are going down and the Fed's still talking about interest rate hikes and the stock market's going south and going up and down a lot on any given day, just sit tight and hoping by next spring the future will be a little bit clearer, as clear as it ever is. And at that point, make a decision how much to send to the trust and how much to use possibly to pay down some of the older lost spaces in CalPERS. So we're in good shape. So I did want to point out bottom of page 5, just to kind of calm everything, the table. So at 2022 had a 6.1. 2022 had a 6.1 loss, but if you look back 5 years, 10 years, 20 years, 30 years, 6.8 is the target rate, and everything beyond 5 years back at this point in time, so pre-COVID, you go pre-COVID, longer term, you're still above the target rate. And I think still CalPERS at some point, when things settle down, they're probably gonna be looking at lowering their assumption down again to 6.5, I think is kind of the dream.
Yeah, and according to the risk mitigation policy, if they exceed the 6.8 by, I think, a minimum of 20 basis points, the discount rate automatically goes down again. So, so the discount rate is gonna be lowered, because if you look at that chart, there are many years where CalPERS exceeds, what their discount rate is. And with the new,
I don't remember what year they started lowering it, but it used to be 8.25. They're down at 6.8 now, so
Yeah.
it's good as far as reducing volatility. So the recommendation is sit tight.
sit tight.
I agree with that recommendation. I just have a question on the bottom, or on the bottom chart on page 4. What is this additional contribution for the interest of the 1.5 million?
Scenarios.
Different scenarios?
Which line?
These.
Oh, so if we were to make, so like on the very top, we can make no additional, and then we end up putting it, the 2 million in the trust.
Oh, gotcha.
And, or like the last 2 columns, we either put 500,000 additional in the trust or 1 million additional in the trust. Those would be the estimated interest earning over this same period.
Gotcha.
Yeah, making just the smaller contribution to the trust, and maybe a larger, or splitting the difference between the 2 million, some in the ADP and some into the trust.
Okay, understood. Thank you. Do we need a motion just to table this?
Real quick, Mr. City Manager, how come am I reading this table wrong? If we, this would be page 3, I'm sure I'm missing something. If our trust, if our 115, we've got 4 million in, but we've got total unfunded liabilities of 8, I'm missing something.
Yeah, so I apologize for that. You're missing a column. So if you go to one of the attachments, so if you go to page 8, which is the second kind of legal size attachment. Oh, I didn't include it there either, I apologize. But there should be a column with the market value of our assets in CalPERS. So the market value of what we have in CalPERS plus our assets in our trust gets us that funded percentage. So I'm missing that column.
Okay.
Yeah.
Okay.
Yeah, it is
It's
a little confusing.
90% of the projected liability
Yeah,
is what you end up having in the market value of the assets, plus
Right.
what we have in section 115.
Got it. Okay. Yeah, no, that seems like a really good strategy.
Could you maybe provide a revised
Yeah.
sheet that you can send around?
yeah, I'll send, I was trying to make it compact enough so it fit into the staff report, but I can send you the full with all the columns. So it give you a better kind of view of what we're looking at. So it'll have our assets at CalPERS, the accrued liability, the unfunded liability, then the funded status, and then you add in our trust assets.
Got it.
Yeah.
So then let's assume that we do this, we do the additional 2 million and we put it towards the unfunded liability, and we have this savings. What are we doing with the savings? Are we going to apply that to the section 115, or are we going to?
No, we don't, once you give money to CalPERS,
Or the section 115.
yeah, if we put money in the section 115, then our policy states that soon as it gets to a certain funded level in a certain fiscal year, we can start using it towards either smoothing out payments, our normal unfunded liability payments, smoothing those out, because as you can see, they kind of start going up, and then kind of peak and then start going down. So we can kind of cut off the top of that mountain and kind of smooth out those payments with our section 115 trust. If we get to the point where our combined funded status is 110%, then we can actually use some of its trust money to pay our normal costs, our normal payroll costs.
Gotcha.
Oh, okay.
Yeah, so the section 150 trust just needs to be used for pension costs. It can be used for unfunded liability payments, it can be used for normal costs, anything related to, we have to pay to CalPERS in regards to retirement benefits.
Gotcha.
Be a good problem.
Yeah.
I looked at that more as savings, not really as we're making the money.
Right.
Okay.
Yeah.
Well, thank you very much. Would somebody like to, make a motion for the recommended action?
It's just receiving file, it's informational.
Oh, got it, okay. Well, thank you very much. Okay, any other questions?
Good job, Z.
Alrighty, how about we'll call the next item staff reports. Do we have any staff reports this evening?
Yes, we do. So we have one of our T-notes is maturing on October 31st. It's a $3 million note, and we're planning on reinvesting. T-note yields are really good right now. So we're looking at buying a new T-note with the maturing assets next week. And that,
Do we have all 5 years covered?
we do currently have all 5 years covered, so the next T-note will be another 5-year note.
We have 5, 4, 3, 2, 1.
And that's all from staff.
Fantastic, thank you.
Great.
Financial Review Committee members, does anybody have anything to report?
Okay, and ask staff for a quick update on status of our annual financial audit. The auditors are close to wrapping up.
Oh, yes. Our county supervisor, Robin Harnish, isn't here today because our auditors are here on site. The audit's going really well, so we were hoping to have it done very soon, and we're bringing our ACFR, our annual comprehensive financial report, to City Council the first meeting in December.
Any reported issues with our audit?
As of today, our auditors told us there are no reported findings with our audit, so it's very good news.
None? Wow,
Yeah.
that's fantastic.
No.
That's great.
We're not done.
We're not done, but we're almost there.
How long is that process?
Well, they do field work, pre-work, like in May.
They come out, I think, end of May, they come out for interim, and then they were here
like a
this week
week.
for final. They were actually here a lot longer this time. They're usually not here for even a full week, but they were here all last week, and then they were here yesterday and today, and hopefully they're leaving.
Being nice to them,
Well, we
right?
had a single audit this year too. Right?
Yeah, they were able to get,
Was it federal,
our
special
single
federal,
audit.
Federal audit, it's not
Yeah.
a single audit, because we got the American Rescue Plan Act monies, federal monies,
Yeah.
and if you exceed so much in federal monies, then you have to get a special audit.
yeah, just on the federal monies. So they were able to do a lot of that work while they were out last week, so that'd be good.
Anything else? Alrighty, the next regular meeting of the Financial Review Committee will be January 31st, 2023 at 4 p.m. in the Public Works Conference Room located at 33282 Golden Lantern, Suite 212, Dana Point, California 92629.